Well, in global markets, we start off with how US indices perform. The jobless claims data has come through in the US, which has come in lower than anticipation. The expectation was the number will come around 215,000. It's come at 193,000, giving the Federal Reserve some amount of bandwidth to play with interest rates as well as inflation. So the focus will continue to be on interest rates and inflation, since the jobs data has come in better than expected and unemployment is expected to come in lower than earlier anticipated. We're also seeing the US economy shrink. Second consecutive quarter of contraction from April to June. We've seen it shrink over 0.5% from that April to June quarter. So GDP continues to shrink, but jobless claims also coming down, which means unemployment is getting more and more favorable despite the rising interest rates, which will give the Federal Reserve more headroom to play with regard to pushing interest rates higher. Moving over to what the markets did therefore in trade yesterday, we saw all three US indices clock 1+% losses. The Dow was down around 1.5%, 450 plus points down on the Dow. Now closing in towards the 29,000 mark, where the Dow is currently. The S&P 500 down over 2%, so was the Nasdaq down almost 3% in trade yesterday, and the futures also don't look too pretty. In fact, we're looking at the Dow futures looking at a cut of 0.25%. Nasdaq futures also down around 0.5% as we speak. So clearly there's some amount of headwind coming in for markets at the moment. Europe too was in the minus. We're looking at 1.5+% cut on the FTSE. The focus continues to be in England and what the Bank of England is doing. Mind you, the Bank of England was selling bonds just a few days back after Wednesday's announcements of tax cuts in the UK. The Bank of England has been forced to start buying back bonds. So it's moved from selling bonds to buying bonds in just a couple of days, and that's largely because bond yields have gone sharply higher, and that has put pressure on both the UK government from an exchequer perspective as well as the Bank of England, which has been monitoring some of those tax cuts and realizes that funding is going to be a problem at the kind of higher rates at which bond yields were headed. So they've come in, they've stepped in, and they've started buying back bonds, which has eased some of the tensions in the UK as well as in the UK bond market. So some of that aided markets yesterday, but clearly markets overall still continue to be unhappy, with the FTSE down 1.8% in trade yesterday. So some of those tailwinds have now gone away. We're looking at Asia as well, largely in the red. We're seeing the Nikkei down over 1.5%. We're seeing the Kospi and the Hang Seng both down anything between 1/5% to 0.5%. We're looking at Shanghai down around 0.5%, the ASX 200 down around 2/3% as well. So cuts across the board. We're seeing the SGX Nifty also down around 0.5% in early trade today. So clearly negative cues coming on the global side. Switching over to where commodities lie, well, oil prices have continued to be around that 81 mark. A couple of factors that have played out through this week. One is, of course, US reserves have fallen slightly, which has led to an increase in oil prices. Also, an OPEC cut in production is expected, which is keeping oil prices elevated. Of course, recession risk is what has dragged oil prices lower earlier. But the key focus area at the moment is the dollar index. The dollar index moved towards the 114 mark, has moved back down towards 112, which has seen gold prices strengthen. Gold prices moved from 1630 an ounce to 1670 an ounce as where it stands at the moment. So that's where oil and gold and the dollar index is at. Moving lastly on to bonds, the US 10-year yield continues to hover around that 3.8% mark at the moment. So clearly the US 10-year bond continues to hold or go towards the higher side, towards that 4% mark at the moment, and that's what the trend currently looks like. Bond yields continuing to gain and bond prices continuing to fall. In terms of news on cryptos, well, Bitcoin currently stands at 19,500, really no change there. We're looking at currently a 0.5% cut on the SGX Nifty, largely on the back of those negative global cues coming through. But the focus, at least in Indian markets, post 10 a.m. will be on how the RBI chooses to maneuver inflation as well as currency as well as liquidity in the system today. So clearly that will largely be the focus for Indian markets today, but global cues broadly in the negative.